Our content is made for information and entertainment purposes only. This is not financial advice, nor are we financial advisors, and we'll never tell you what to do with your life or money. Please do your own research before trading or in any type of investing. YFT Network does not work for nor in part of any existing business or privately owned organizations. If you would like to promote your business with our platform, please check our website at yftnetwork.com. Shalom, shalom, what's going on? Welcome back, ladies and gentlemen. YFT, baby, let's go. So we're going to do something a little different today. No, I haven't been on the videos a lot because I've been in the middle of moving and stuff, but I got everything set up. We're good to go. We all see what's going on out here. Caesar's trying to make the poor poorer, and that's just the bottom line, man. You know what I mean? We see this. We understand just as financial, not advisors or professionals, but we just learn economics, man. You know what I mean? Some of us went to school for it and really take this stuff seriously. And you can see the stuff unfold. And right now, you know what I mean, what we're showing you guys and seeing how Caesar's taking control, you can see he has everyone spending up their fiat. You know what I'm saying? So that's really going to show everyone that, look, when all that's finished, people are going to be running to these FEMA camps for Caesar to save them. You know what I mean? The FEMA camps are for people with coronavirus. The FEMA camps are for people that need help. You know what I'm saying? Because anyone can sit at home and try and fight a virus. That's not the problem. The problem is he came out here and is trying to make everybody poor. So let's just start off here. I'm going to do something a little different today. We're going to go on and look at the technicals for the traditional market. Because the traditional market, we have to understand everything is tied up with Caesar's denominations as far as his US dollar, his fiat. So since we know America runs on these corporations, we have to actually look at the corporations on a technical perspective and see how they're doing. So we're going to look at the Dow Jones and all that and just see that. But first we're going to look at CoinMarketCap just to show you guys that crypto, even though crypto had a drop last week, it's doing fine right now. Not saying it can't drop anymore, but it's showing a lot of good, strong stability through these times of trouble. Like I said, man, we weren't worried about prices dropping. A lot of us are in profit right now just for buying the dip. You know what I'm saying? We were buying at 13 cents XRP still. You know what I mean? I sold a little bit, but I'm still holding long term. You know what I'm saying? Because we understand the system. So you can see a lot of the cryptos are in the green this week. But we're not saying that the bottom has happened and we're gonna go up now. You know what I'm saying? This is not what we're saying. This is not what we're saying. But that point was a good time to buy last week, and we did get to 13 cents. That was probably around an average for all the exchanges, but some exchanges did see 9 cents on XRP. A lot of people were buying Ethereum. I bought some Ethereum. I feel like that's another good long-term coin. A lot of these coins are going to last. A lot of these coins are going to get wiped out, though. That's what we have to understand. But that's enough of the coins. We're going to get into what's really going on with Caesar's Caesar's land and his markets, because that's what's really messing the people up right now. So we're going to go to the Dow Jones, and we're going to look at the Dow Jones and what's going on, for the past. We're going to go back and look at history and look at today, because this is probably the fastest drop we've ever seen since the Great Depression. Now, what we have to understand is, do we continue to just nosedive all the way down here? I don't see that happening. I am expecting some type of retrace, then come back down. So we'll see how these next few months go. But right now, let's just see what we got on the charts right now. So the first thing I want to do is just look at the retracement. So when we have our Fibonacci retracement, when we're on our uptrend, you always want to start from the bottom, from the last bottom that we had. So this was the 2008 crash right here. And this is why a lot of traders, they know when to get in and out of Caesar's schemes, because they're looking at the charts. Just because Caesar has all the money, he's able to manipulate stuff, doesn't mean you can't take advantage and know what Caesar's doing. This is why trading is such a good tool and understanding, you know what I mean, what to do with your fiat is such a good tool instead of sitting there being screwed over by Caesar. You know what I'm saying? This is what's happening with our people for years and decades now. And the reason for this, for a lot of Negroes not knowing this, because our financial literacy was taken away from us. It's in the curses. If you go read Deuteronomy 28, you know what I mean? There's a few verses in there that's referring to finances. You know what I mean? You should be the tail and not the head. You know what I'm saying? When we're the tail, you're supposed to be financially on the bottom. You're not supposed to be able to overcome what's being happened to us to be able to rise up against our oppressor. So we got to understand that when the Most High says they will lend to you, but you cannot lend to thee, that's talking about banking. You know what I mean? That's all monetary verses that the Most High is talking about. So we're just seeing this stuff, and you can see why, just like that movie, The Banker. I don't know if you guys heard about it. It's supposed to be coming out on Apple TV. But you know what I'm saying? You got to understand why Caesar doesn't like people, especially other nations that are in his system, rising up financially, because he's here to take over everything. He don't want you to rise up over him financially. That's all he cares about, because he know monetarily, that's the thing that's gonna oppress and suppress everyone around the world. So let's just go see what's going on. So from 2008, we started our Fibonacci retracement. So this is the tool down here. It's called Fibonacci retracement. You can go find it on the side right here as well. So we took that tool, we started the 100%, which is 1. If you see 1 right here, we started that from the bottom of the last bear market. So the last bear market happened in 2008 when we crashed all the way down. It started in the beginning at the end of 2007, and it ended in the middle of 2009. So we took that bottom, and now that this is a definite top, you know what I'm saying? We took the 0 and ran it, the other side of the Fibonacci retracement, we ran it all the way to the top. So that was around 30,000, around 29,500, whatever. So perfectly, look how good the line's up. You know what I mean? You can see that we came from the bottom here. In 2009, we ran all the way up here to about 17,000. Then we crashed again, had a small correction. This was just a little blip. Nothing really happened. It recovered and it kept going on a bull run. So this happened around 2015 and went down to about 15 grand and consolidated and went up again. So around 2015 to 2016 was like a stall area. Then we ran up again to 29,000 recently this year. So after that, we had a huge crash. You know what I'm saying? They're gonna sit here and blame it on coronavirus. But if you're looking at the charts and you know how Caesar operates, you know how these charts operate, it's really not hard to know that the economy was too pumped up. Especially when they're announcing that they're printing all this money for almost a half a year now. They've been saying this they've been printing extra money since October, November. So it was only a matter of time till we knew, all right, boom, it wasn't a good time to have your money in the stock markets or in fiat in general. I mean, the fiat is pumping right now. They're manipulating it because of the stocks, but we're going to talk about that in another video. So as you can see here, the economy based on the top companies, which is what Caesar runs on, you can see that we went up to 29, 500, 600 around there. And we crash. So when we go from 1 down here all the way to 0, this 0.236, this 0.38, let me zoom up on real quick. This 0.5, this 0.618, this 0.702. Usually you can put 0.786. I like 0.702 as well. I see a lot of traders like using that as well because it's in the middle of 0.618 and 0.786. So it gives you a good bounce because that's a lot of 0.618 to 0.786. Is a lot of retracement numbers that a lot of people like using just because a lot of the times when you retrace, you're not going to always retrace 100% back to the old point. So a lot of the times, just because we were down here at one point doesn't mean we're going to retrace all the way back down here. Now, if we go into depression status where Babylon is just done, well, of course, we're going to just go to 0. But, you know what I mean, we don't see Babylon being done yet. There's still a lot of stuff Caesar has up his sleeve. And you can't just count out a deceiver. You can't count them out. You know what I'm saying? So until this world is destroyed, Caesar has control of it. You know what I'm saying? The Most High hid his face from his children, and that's how we see it. You know what I'm saying? We're not going to be recovered until the Most High does it himself. And this is what we understand, just having wisdom, knowledge, and understanding. So as you can see, once we crashed, we hit this 38% level. That means we retraced 38% of the previous move from 2009. So we're almost at this 50% level right here. And you notice the 50% level is where? Around the same place where we were, where I told you that we were kind of stalling out for a little bit. So let me just draw a square right here, a rectangle, just to show you even better. And we're going to put that right around here. So it's not hard to see. So let me just make it clear. And you can see here, we're almost at that 50% level. That's around 18,027. We are in the 19,000s right now as we're speaking. And that's a big drop already. You can see a lot of the times, even the 2008 crash, we never had a drop like this. This is more of a topping up type of drop. Like, all right, the market is exhausted. Caesar sees that. They all knew this was his time. Look at the 2008 crash. We went down in the 2008 crash from our top in 2008. We went down 54%. But how long did that take? You know what I'm saying? From the very top to the very bottom, how long did that take? It took 528 days for that to occur. You know what I'm saying? It took a long time for that 2008 crash from November 2007 to the middle of 2009. You can see here, it took 75 bars. This is on the weekly because I had to expand the chart because the daily would be too small. But it took 525 days for this to occur, and it dropped 55%. So let's just compare that drop in the 2008 crash to the drop that we have now. This is more of a bleeding type of top and drop where, all right, the market is exhausted. So let's just show you now, 2008 compared to now. So we're going to go from the top to where price all went down, and we've already taken 36% of the market off from that rise. So let's just show you how long did that take. Let's just put it on there real quick. We're going to go from the very top till today, and you can see 42 days. It took 42 days to go down 36% of our previous move. In 2008, and we're not, and this cycle right now isn't even finished. We don't know where the real bottom is at. This is why Caesar's freaking out. But Caesar already knew this. So it shouldn't be a surprise to anyone that's interested in learning finances. We have this in our head that just because we're in captivity, we got to be a servant, and anything that has to do with commerce or being a merchant, that doesn't have anything to do with us. We have to be a servant and get back to our land to do. No, man. Understanding this stuff is a real skill and a real career. And anyone can do it if you put your mind to it. You know what I'm saying? And you can see here from 2008 on that crash, it took us 525 days just to wipe off 55% of the market. That took a long time. The 2008 crash is like baby compared to what's going on right now. Now if we did go down 55%, it only took us 42 days. Now remember that, to go down 36%. So if we go down 55%, let's do those math, let's do those numbers. 55%, look at that. That will actually bring us down to that 0.702 level. That's a lot taken off the market. I wouldn't be surprised if we did get all the way down here. Right now we just bled out, but you can see 38%, 42 days already. That's crazy. Let's just go to the dot-com bubble. The dot-com bubble was 2000s. All these recessions, people were making money off of it. Just because you see the economy doing bad doesn't mean there weren't people in the background that understood finances and knew what they had to put their money in. You know what I'm saying? So back in 2000, that was a big revolution. Yeah, the economy looked bad on the outside, but there were many people that were buying up the right stocks. Just like cryptocurrency, there were many people buying up the right stocks where they knew that they were going to flourish in the future. You know what I'm saying? So when this .com bubble happened, you were having a lot of websites opening up. You know what I'm saying? A lot of technology was just booming, but then there's a lot of websites that didn't make it. So what happened? The market crashed, but then there were people that were making the right decisions with their money that understood where the market was going. And then what happened? The market recovered. So from that top in 2000 to the bottom that happened in 2003, that took off 39% of the market. And that's good to look at because look, what did I say here? We had 38% of the market wiped off over here. 36% of the market wiped off here, which only took 42 days. Look how long the .com bubble took to take off 39% of the market. Look how long it took. So let me bring this chart out real quick. It took us 1,029 days to wipe off 39% of the market in the .com bubble. So 525 days for the 2008 crash, 1,029 days for the .com bubble crash. And already we wiped off 36% in 42 days. So this is an obvious top. This is why Caesar is, he knew this already. Don't be fooled and think coronavirus caused all this. You know what I'm saying? Look at this overextended market right here. You can see that we've been in bull runs this entire time. But look at 2000 to 2010. Let me just bring this up real quick. So we're going to look at 2000 to 2010. And you can see that let me go back before that. I'm going to go to 1990 to 2000 to around 2009. So let me just make a chart real quick and just show you guys this. So from the bottom here, this is where we bottomed out after the .com bubble. This was in 2000, 2001, 2002, 2003. We bottomed out right there. And you can see here that we retraced this entire move. So right here, we did actually go back 100%. So if I took this one right here and brought the zero up here, you can see that we retraced back on the 2008 crash, back to the same crash levels as the .com bubble. Now, even though that a lot of people were making money here, this wasn't a very volatile market. And I'm gonna tell you why. Because we can make a bottom here, and then which would be a support, then we make a resistance here. And you can see, let me just draw this real quick. This entire thing right here is a zone. You know what I mean? We can clearly see that that's a zone. So just because you've been going up and down for this entire, all these years right here, what's that, 2 decades? 95, 2005, that's 2 decades. You can see that we're going up and down in between this zone. So we went up, went down, went up, went down. So 1, 2, and then boom, we finally broke out. So we're basically going sideways for 2 decades. So these crashes were, they were minimum because they were just a sideways trend for real. So even if you bought here at the top at the .com bubble, which would be around here, and you got the crash, even if you stayed in your stocks, you still would have gained more money if you just waited. Let's see how long that took, 2000 to 2007. You know what I'm saying? If you bought it here around 11,400 and then the market crashed back down to 7,000, if you would have just held on in this side trend right here in 2007, you still would have been up. You would have been up. Let's see how much you would have been up. You would have been up 20%. Now it would have took a long time for you to gain that 20%, but in a sideways market, you can do stuff like that. The difference between what we're in now is we went parabolic. You know what I'm saying? This ain't no sideways market right now. This is parabolic. This is where the price goes up like berserk and crashes down crazy. So to get a zone, to expect a zone kind of action going on here is pretty doubtful. You know what I'm saying? Because we're going up here. Let me fix this real quick. It's pretty doubtful because if we go here, we made our bounce 2, 3, 5. Boom. This is really a top of the market, and we fell down 36% already. So what we could expect here is, all right, so the market recovers, all right, they come out with a vaccine. So if they come out with a vaccine, they cannot keep tanking the market because they're blaming this all on coronavirus. So this is kind of why they're taking long with the vaccine, and they're saying we don't know what vaccine can't be done and all. You know what I mean? This is all in their game plan so they can fool the people. So when that vaccine comes out, now we don't know what that vaccine is going to do. You know what I'm saying? It could kill more people. It could, you know what I mean? I don't know. We don't know what Caesar's plan is, but we can just be prepared based on that news. So if people are actually getting cured for, you know what I mean, their so-called virus, we could definitely expect some type of a pump because a lot of people are going to think it's the bottom. So when people think it's the bottom, the coronavirus is done, and then it goes back up and has a retrace, and then the Caesar might come out again and saying, oh, coronavirus came back out, or some type of war pops off or something, then we can expect another fall off. And that second dump will be more vicious than this dump because this will break structure and we'll probably go back into this zone right here that we were in the 2000s. You know what I mean? This will be the ultimate crash that nobody wants to happen. This is when all the FEMA camps will be filled up because no one has money because all these corporations will freeze up and all that as well. Just like they're doing now with the coronavirus, but there's more of a agenda put towards it. So this is really all I wanted to show you for now. We'll get back into it. Then we'll get back into more of the Dow Jones and back further, even to the Great Depression. Because the Great Depression, I mean, that's a good thing to look. That's another good chart to look at. Now we know there wasn't technology back like we have now back when the Great Depression was going, but you got to understand numbers are numbers still. So it doesn't matter how long you go back. If you can put those numbers and insert it into the internet or into a number system, the charts can still pop up. So I can go all the way back to 1929 on these charts. Because we got to understand, numbers are numbers, man. Numbers don't change. If a price was a price on a certain day, you know what I mean? You can put it on a chart and you can see it. You know what I mean? It's just played out. So just looking at 1929, and now, this is what I was kind of talking about. This is that kind of relief rally, like we can see in 1929. Look at this big crash right here. We fell down. Almost the same thing we did now. What we're experiencing now is almost the same thing that happened in 1929. Look at the top. In 1929, we're at $385 on the Dow Jones. The initial crash took off 50% of the market. That's a huge crash. That has not happened with what we went down. 36% right now? How long did this crash take in 1929? This crash took roughly 63 days until it got a bounce. So until it got that bounce, it took 63 days to wipe off 50% of the market. Then we had that relief rally where people thought, all right, that was the bottom. It's a good time to buy in, just like I told you guys. So when they come out and say, oh, we got a vaccine for coronavirus and they can't really blame anything anymore, then we're going to have that relief rally where the market goes back up a little bit. You know what I'm saying? And people are going to get psyched. People are going to get hyped that everything's done. And then what happens next? The market went from 385 down to 194. Then we had that relief rally, went back to 300. And then we went from 300 all the way down to what? Let's see what that is. We went from 300 all the way down to 39. So when people thought the market bounced and they were buying back in, you know what I'm saying, we had 86% of the market wiped off after that move. So the entire 1929 crash, if you actually do the math, if you start from the top to the bottom, it took off 90% of the market. How long did that take? It took roughly 1,000 23 days, on 36 days. So it took around the same amount of time as the dot-com bubble. The 1929 crash, it went down further, but the bottom didn't set in completely for 1,036 days. So people were bleeding out for all those, you know what I mean? How many years is that? That's 3+ years. You know what I'm saying? So we're just looking at the perspective of everything, just looking at all the charts, just seeing at all the moves. Just be careful what Caesar's going to do next. It's not nothing to be fearful about, but if you're actually following finances and this is your thing, this is what you want to be looking at. Because you want to know how Caesar's companies are doing. Because you got to understand, Caesar takes pride in his corporations. He takes pride in his taxes. You know what I'm saying? And his fiat. Those are the three main things that Caesar prides his big U.S. fake corporation on. You know what I'm saying? And just fear. So this is it for this video. Gonna be busting out videos. We're back now live. Sunday, remember, we're gonna have that chat. So look out for the link for that. It's gonna be on Zoom. So download your Zoom apps now. I'm gonna make a post for it as well. We're gonna put it on the YFT Patreon. So look at that, and we're gonna have a group Zoom call. So be prepared for that on Zoom on Sunday, and that will be private. So everybody that signed up for Patreon, they're gonna get the link, and we're gonna have our own private call, just going over stuff that, you know what I mean, we all should know. And it's not even talking about crypto. You know what I mean, it's gonna be more of what's going on in the world and how the best thing to do is rely on God and let him show you what you should be doing. You know what I'm saying? Caesar can't help you. Caesar can't do none of that for you. Everything that we do as a people, you got to save yourself. You know what I'm saying? You got to use your own intelligence, and what the Most High gave you is a skill to save yourself. So what we're doing at YFT, we're just showing you what we know and what we can do without going to Caesar. This is all it is, man. So stay locked in. Thanks for watching. I'm gone. Peace.